Well, that's good. We can end it right at 8. That's perfect.
Yeah. Hey, Chris, you have a dinner appointment? Too bad we missed it.
Dinner reservation. Dinner reservation.
Chris is
My
like,
wife,
I got a business deal on this
my wife
cruise. I
is
got to
making
talk
me
with
meet her at 8 o'clock.
Yeah. What's up with the
hilarious.
camera today, Amit?
I'll fix it. Give it a sec.
Yeah, yeah.
So
Oh man,
Carlos quit the pod,
it's about time.
I guess. And
Carlos didn't quit the pod.
he quit the
he's-
pod. He just texted. I can show the text.
He's
He said
going
he
full
quit.
vision pro.
Guys, spatial computing is gonna get every single marketing executive on.
Isn't that what I said?
I was like, Carlos, who the fuck is gonna use this, bro?
Oh
No,
man.
guys, everyone on the planet. I'm like,
Listen, when it comes to like your own profession, everyone gets really amped up about it, right? So it's nothing that I could say like to fault him. It's just something that he personally cares deeply about. So, let him be excited about it.
I'm excited about that too. I just
funny thing
think
is he's
it's
probably
going to
right.
play out over a long
That's the funny part.
period of time. Even Meta, the whole bet is not it's happening next year. The whole bet it's going to take like 10 years.
Yeah.
Anyway.
So funny thing about cruises and pineapples. I don't know if you know this, but
I was gonna ask about the shirt.
apparently-
Go ahead, you explain it.
Okay. Well, no, we got it last minute, right? So specifically for this cruise. The thing is, I didn't realize that the whole thing with cruises and pineapples is that if you're a swinger, you like identify yourself with a pineapple, like an upside down pineapple. So if you go to like cruise ships, you'll see people put stickers on their door that have like pineapples on them, and apparently that's like international code for, hey, we're swingers. You can make a pass at us. I don't know if you know that.
I never. heard
Well,
of that
I
before.
assume you know it from experience.
No, I was watching this guy.
Or is
on
that why you're
YouTube.
wearing it today? Because you know that's what happens.
No, I was watching on this cruise guy. I
Yeah,
forgot what
sure.
his name is, but he's got a great YouTube channel that especially talks about cruises. So he gives you like all these pointers, and one of them was like, "What's all the pineapples about?" I'm like, "Huh, what is all the pineapples about?" And it turns out that it's about a little hanky panky. That's what it is. So
So let me share this off the bat. This is too good before it goes away. 'Cause-
Swinging is a very interesting concept.
So check this out. That's the CEO of Unity. That's his Wikipedia right now.
Oh my, John Ricitelli. We apparently. So you.
So
did a
I
lot
did
of-
I did more homework on this. If we should talk about this a little bit.
Yeah, let's get into it. What is that homework you figured out?
Well, no, I was looking after. So, is this an important thing that's going on? And look, a lot of indie developers are really furious at this because it left them in a position where they didn't know how much they would end up paying because Unity doesn't actually have a good metric, or at least I've read they don't have a good way to track the actual people who install. They're promising that, hey, trust us, bro, we'll figure it out. So, but there is no actual way that they've told people how they will track these installs. So, a lot of indie developers are worried that if you want to destroy an indie developer, you can create fake accounts that will download Unity games for them, not that developer, and they're going to get charged, right? That's what they're afraid of. So, and also all these free games. So, what if a developer doesn't make a lot of money on a game, even if it's successful, right? And it doesn't make a lot of money, they still have to pay them for those downloads. So it's this is a really stupid thing. The incentives used to be aligned, and the incentive was like, hey, when you make money, you pay us a fee, right? That's usually the way it is. You pay us some sort of a royalty. I forgot what it is for Unity, but I think Unreal charges 5%. Over $1 million when you do it, you got to pay them 5% of how much you make. So that's the incentives are aligned. The more money a developer makes, then Unity or Unreal gets paid more money. That's the way it works. But now the incentives are being skewed by them. And the reason they're doing this, it seems like, is because AppLovin is their competitor for like ads. I don't know if you know that. But AppLovin, they're telling developers now, hey, if you come to our platform, you don't need to worry about these install things. So they're doing some fucking, they're doing some shady shit.
What did you see on his history? Like he, as a CEO,
okay, so I
researched that. Yeah.
Yeah, I researched the CEO, and maybe I should bring up because I posted a bunch of stuff, especially a chart of EA. So let me bring that up too. He worked at EA as a CEO from 2007. He was there earlier, but from 2007 to 2013, he was the guy in charge, right? And I want to show you the stock price of EA during that time. So and by the way, I sold not exactly half, but I sold some Unity today. I was like, I'm gonna divest myself a little bit from this guy. Actually, not the software. That's the thing. Once again, it's like this shows you clearly why you need management and you need the software to be great. You can't just have one or the other. And it seems like the management is really shit. That's what it seems like. Let me bring this up. What's the ticker for EA? EA Sports. What is it? Just EA. Yeah, it's just.
I think you make a really good point right there that sometimes people get, and especially from an investing standpoint, people get too fixated on the product and not necessarily the management, and the management screws over any chance of that product becoming a big thing, right? That's the problem with so many companies. Like, so from an investment standpoint, you look at the product, you're like, wow, this is a great product. This is going to be gangbusters. It's going to sell everywhere. But then, like, you have management who has no idea how to market it, and if they do market it, they destroy their own base like community that made it what it is, you know. And so I think that's one of the things. Like, if you go back to history and you look at like Facebook, that was the thing where Facebook came out, but then they were able to monetize it, but people didn't necessarily see any diminishment of product, right? But if they had just put a shit ton of ads all over the place, you know, maybe people wouldn't have used Facebook as much. So that's one of the reasons why you have to always give management their leeway, but then at the same time always make sure that they're making the right moves and generating money for the shareholders without alienating their consumers.
Look, I agree with you, but I want to fight back against one point. This app is a monopoly. It's in charge of a lot of the iOS games and the Android games. It's growing still, okay? And it's going into more industries. This is a money grab by a CEO who is a business. I looked up his background. He's a business guy. He's not a technologist. Yet he's worked at technology companies like EA, but his background is like Haagen-Dazs. I mean, like, so.
I mean, doesn't that sound like, what's his name, Scully from Apple, when John Scully joined Apple and basically created
it's something
Apple?
like this. It's something like this. Yeah. And this is what, you know, because when I invested in Unity, and look, I'm still up, by the way, and that's why I sold today. I was like, listen, I'm still up. I better take some profits if this guy is going to keep ruining Unity. Unity is a technology platform, right? It does a lot of great technological things for gamers and VR and all these things. And I don't think this guy understands all of that. So I feel like he doesn't understand the community, because to go against the community, these are developers. Remember, these are smart people, right? They know how to code. If you force them into a corner, they don't want to leave, but they can. That's the thing, right? So he's giving them the push in order to go somewhere else, to go look. And I've talked to my brother who is a developer, and he's told me about the different options people are looking at. Obviously, Unreal is one. Godot is another engine that they're using. There's Cocos 2D, which is a Chinese freaking engine, and they're even looking at that, which is insane. So he's giving these people a push because he's thinking about, I need to push my stock price up, and not about the long term of Unity's health and growth, which is all developers. And once again, these are smart people. They can figure out a way out of this. It's not like he's picking on like simple folk who don't understand how to code their way around this. Do you know what I'm saying? So my point is that Unity is continuously growing. He did not have to do this to push it that hard. I think the stock price being down 80% is what pushed him to this point. But let me show the graph here of Unity for the last, well, not Unity, EA actually, EA.
We'll talk about ARM in a little bit. Obviously, that's the big news of the day. David, again, I don't know where you're getting this money from, but we'll get to your super chats.
So I looked at his tenure here. Do you have it up?
Yeah.
And it's ridiculous. Literally, like almost like a couple of months after he takes tenure, he starts making acquisitions that are very, very expensive and not good for EA. The stock proceeds to crater all the way up until he basically, I think he leaves. I'm not sure if he was fired, but I didn't look that part up. But he left at around 2013. He was there from 2007 to 2013. As soon as this guy leaves, the stock starts to recover. It's like, you couldn't write this better in terms of like what kind of CEO this guy is. Like, he is not the cream of the crop. And I feel the problem is that he is not a technical CEO. Once again, I go back to that. And I should have done my homework there. Because we talked about this, like the reason I like those people like Elon, right? And basically these are tech CEOs who understand how not only the company runs, but they understand the actual technology for the business. And I feel like this guy doesn't really understand his relationship with the developers and his clients. and he's just trying to milk them from everything that they have, and he's pushing away people. Even though this is going to affect so few people, by the way, I did the other research. This is not going to affect a lot of people in terms of who it's actually going to affect, but it doesn't matter. He's pissing off the wrong people. These are intelligent guys I keep talking about. So I think they can leave. And if they don't change their ways, like literally, if they don't announce in the next couple of days or week, it makes it a worse and worse investment for me.
Okay. Would you consider selling out of all of it if they don't make any change to this?
Well, no. The reason I won't sell out of all of it is because at the end of the day, this is like a monopoly. So I remember back in the day, you probably don't, but everyone hated Microsoft. I don't know if you remember that. But everybody hated Bill Gates and Microsoft back in the 90s.
Was it because he was on Epstein's island, or
that wasn't why? No, we knew it was a monopoly, first of all, and what they were doing with Internet Explorer and all these things, and shoving down software down your throat and making other companies go bankrupt. So people didn't like Bill Gates, they didn't like Microsoft, and look what happened. They still did fine. So when you're in a monopolistic position, you can take advantage of that position, and that's what he's doing. So when people will go away, look, it'll affect them. Maybe 5% go away, but I don't think 95% of people are switching engines. It's just going to take too long to fix all their games, change all their code. They're still going to have to support all the old code. There's a big process to do that. So he has a lot of time to figure stuff out in the interim. So I don't think they're going bankrupt. Let me put it this way. So that's why I'm not selling the entire position. But I don't want to be involved with this guy. So the more he does this, the less I want to be involved with him personally.
All right. Let's get to the main topic of the day. Here we go. ARM IPO has climbed 25% in their NASDAQ debut. Shares are currently trading at 62. Oh, shit. It's at 67 after hours. So it ended 63 at 4 p.m. I did not know it went to 67. It's up 30.6% on the day. So if you're retail and you got in at 51, you're up 30% in one day. The S&P averages 8% for most of the time. So you have basically 3.5 years of S&P gains in a couple of hours if you got in at the IPO price. Chris, did you invest in ARM, and do you think retail investors should keep holding the stock?
No, I'm good. I'm not gonna buy it right now. I'm not gonna chase it. Like, the numbers don't look nearly as appealing as the story, and I'm still doing my own research. Not gonna try to time it. Not trying to get. A lot of times people get sucked into the IPOs, and then initially you have this giant pop of enthusiasm, and then eventually, like, when the numbers start to come out, people are like, wait a second, this isn't the company we thought it was. And then everyone sells off, and eventually you get a correction, right? So these first day bumps that you see when IPOs come out, they're not necessarily like the real valuation that people should be giving it. There's better opportunities in the market right now that are safer, that are not more speculative. So I'd wait. Yeah. And someone said, wait 7 months. Yeah. 7 to 9 months is a good time.
I'd say over a year. Easily.
Yeah, maybe even a year.
Yeah, I mean, like right now, people are just trading it and they're following momentum. So I don't think fundamentals matter when IPOs come out. Like, So I think that's what's happening right now. But having said that, if this is 2021 heading into 2022, this would have been over 100 billion
100%,
in a heartbeat.
100%.
Yeah. Dude, SPACs were coming out with fucking $50 billion valuations. Come on. So
Rivian was 140 billion or something like that. Like after 2 days in the market, it's around 15 now, right? 20, whatever it is.
Yeah.
Yeah, this is really interesting. I mean, obviously, it was a successful IPO so far, but it was successful if you got in at 51. The question is, how much of retail actually got in at 51 or 52 or 56 to get some of this alpha? Because if you didn't get in there, if you got in at 61, 62, it's a lot more riskier and the alpha's not as strong. But I guess for the big guys that invested heavy in 51, they're up. And they're probably not selling.
Yeah.
Like Google's not selling, their stake this early. Okay, cool. Next topic for the day is PPI. Came in at 1.6% year over year, 0.7% month over month. I mean, it's not that big of a deal. The market kind of ate it up. So producer price index was hotter than expected, just like CPI, but the market didn't care too much. Do you think it has overall any impact on inflation writ large, given it came in hotter, or a nothing burger, kind of like CPI?
I think it was a nothing burger. I think a lot of what we saw today was more on the ECB. The ECB raised rates today, but
Yep.
they also had a lot of dovish commentary, which was that, we are pretty much at a point where there's sufficient rates to keep inflation tempered, right? So even the 2% target that like the Fed is trying to go for, that's not a hard target. And I don't think that they wanted to get to like 2% in 6 months. I think this was like, hey, we'll get to 2% in like a year and some change. And we got pretty damn close to the threes. The problem, of course, that we ran into is with the Saudis and the Russians and them cutting their production. So now our oil prices are higher. But this is where the government has to, like the federal government has to create some opportunities for the oil companies to actually expand their business and grow more production so that the price of oil can come down a little bit, but like benefit the US. So the way that I would do it personally, I would just say, you know what, you can pay us in oil. Let the federal government get paid in oil. And I know that
How would that
sounds
work?
crazy.
How would that work?
Well, right now with the SPR, right now we're at almost like what 30, 40-year lows with the SPR. Right now we need to fill the damn SPR back up because we drew from it, right? So fill it back up, use existing supply. So just be like, all production from now on, if you owe us taxes, you can pay us in oil depending on a fixed rate. So like, let's say right now they set the rate at like 50, 60 dollars a barrel or $75 a barrel. The oil companies would be incentivized because they just have a customer that's there that they're going to have to pay for. So instead of them pumping the oil, them having to sell the oil, then take the dollars that they get, then use the profit from that to pay the government taxes, just cut out the middleman and be like, okay, look, we owe you 10 billion or $2 billion in taxes. Here's $2 billion in oil instead, and call it a day. And the SPR gets refilled.
Do you think there would be incentive from the oil providers to pay it in that way?
Oil producers?
Yeah, producers.
I mean, you'd have to create things around it to basically make it appealing for them so that they produce more. I mean, they're already producing at record amounts right now. We've gone back to producing prior to 2019 levels. The problem is the Saudis and the Russians keep cutting, especially the Saudis. So that's where we run into, because as they are a marginal. They're basically, when Saudi Arabia makes cuts, they're sizable cuts that impact the entire market. So that's the problem. And we need to somehow conquer. I mean, if it was Trump, it'd be a different story. Trump would have just made one phone call and said, hey, listen, man, got to get that oil back up and running. Got to get that shit flowing. And Middle East at the time probably would have relented and said, sure, let's, we'll figure this out. But under Biden, I'm not sure that he has any real control over the Saudis. So, yeah.
I don't know about, so once again, I don't want to get too deep into the politics, but I think Biden is more lax in these types of things, or he doesn't make it known he's doing anything as much,
he's not doing anything. His handlers are doing
we don't know.
Like,
we don't know what's going on. With Trump, you would get a presentation every day, a 45-minute discussion. So it was a different, interaction with the American public. Let me put it this way.
Yeah.
And looking at this, so once again, I've never paid attention to PPI in my whole life, honestly. And PPI climbed 0.2%. This is minus food and energy. Now, I'm curious. I don't know, Chris, if you ever did this homework, but did you ever look back in the history like 10 years ago? Is this just standard? Does PPI climb 0.2%, 0.5%? Is that the standard?
I mean, it fluctuates. Yeah, it's just right now the radar is more on these numbers. Normally, CPI readings, no one even gave a shit about them for the last 10 years. It was
right,
always
that's what it seems
like. Even if it was a hot year, like it was like 2.5%, whatever, no one gave a shit because they were like, oh, whatever, it'll even out next year when it goes down to like 1.6, 1.7. I mean, for the last 10 years, we had a problem with deflationary headwinds rather than inflationary headwinds. So we're just going on the opposite end of that. The problem, I think, is more structural rather than fundamental. So right now, shelter is one of the components that's really keeping things high. So how do we fix shelter? Well, the way that believe it or not, like I said, the way that you fix shelter inflation is by actually cutting interest rates. because right now people are not selling their homes, and if people are not selling their homes, there's no inventory in the market. If there's no inventory on the market, the people who are selling at much higher rates because they know that there's a limited amount of inventory for a large amount of buyers. So right now, the companies that are benefiting the most are the home builders. Like, they're making a shit ton of money because as they build, they're making crap ton of money on the margins because, you know, everyone needs a place to live.
So you're breaking up a little bit, but I did speak to my broker because I am looking for property. I don't know. I think he's gone. Starling failed. Starling down.
Yo, he's frozen. Oh, there he is. You're
he's
back.
there.
You're back.
So I did talk to my real estate broker because I am looking back in Jersey City for more property. So I'm asking him how it's going. Obviously, is it a good time to sell? Because hey, if things pumped a lot, I didn't even know. I wasn't paying attention. Did it pump a lot? So I was looking at prices. That's number one, and all the prices around where I care about, they're way higher, which is crazy. I know we talked about this, but they're becoming unaffordable, like we keep discussing. And I'm not sure this correction is coming for Jersey City, New Jersey, New York. I don't know if that correction is coming. So I said, okay, well, what about, I asked the broker, I said, so are we going to a slowdown? He goes, yes, people are right now, because of rates, buying less. But I said, what about the prices of houses? He goes, they're not going down. So so the houses aren't reacting to people buying less. And those people, he said, that his clients at least, okay, I don't know how many clients he has, but he said his clients, a lot of times they're now waiting because they know rates are going to come down. So they're just going to wait it out. So he's saying this is actually happening right now. So okay, I said, okay, so what happens next year when rates come down? Are the prices of the houses, at least where I'm talking about in Jersey City, going to come down? He's like, no, they're going to go up. He's like, people want to live there. They're waiting for the moment they can. And the people who are selling will sell it at whatever price because the rates are coming down. So this is his belief. Once again, I don't know the middle of the country. I have no idea what's going on there. I'm only paying attention to around Hoboken, Jersey City, Union City. There's Bayonne. Like, so those areas around New York that I'm paying attention to. And so that's his belief that actually prices will continue to go up. See what happens. But people are buying less right now because of the rates. But it's not affecting the prices, which is also crazy. I thought that was all interesting.
Yeah. I mean, it's a supply.
Sounds like a broker.
Yeah.
No, he said it's hard for him to make a sale. So I don't know if it sounds like a broker. He's saying it's hard for me to make a sale because people are now waiting for lower rates. So that's next year. So I'm not sure if that sounds like a broker.
Yeah.
All right, we got to do some of these super chats. Got to get these out of the way. David says, if you look at ARM valuation versus SMCI when it comes to price of sales of next year's estimated revenue, wouldn't ARM be expensive and SMCI cheap?
I haven't done the margin.
I think the answer is yes, though. When you look at the price of sales of next year's estimated revenue, even though SMCI will do less revenue than ARM,
no, but it's not just sales, it's also margin. Like, what kind of margin is ARM getting versus what kind of margin is SMCI getting? Because SMCI is lower margin stuff for the most part. It's just so whenever you look at price to sales with two different companies, you got to look at the margins, because then you're kind of like, you're only looking at half the equation. You have to see what kind of margins a company is getting. So if a company is doing $100 billion in revenue, but only getting $1 billion in net year, that's not good, right? Versus a company that's doing, let's say, 10 billion and getting 2 billion in profit. So the company that you want to invest in, the one that does 2 billion in profit, because that means that profit could be reinvested to grow the business. The 1 billion, even if they grow their revenue, their margins are super tight. So a lot of times you look at companies and people focus on it's like a halfway equation. So yeah.
Okay, your Starlink's fucking up a little bit, but that's all right. Vitaly, this question's for you. If Apple could pull it off, wouldn't buying Unity make strategic sense for them?
Yeah, I mean, I think Meta tried to buy Unity, and yes, it makes sense for Apple. Owning Unity is like a no-brainer. But once again, I don't know if the government will allow big companies to buy Unity at this point. I think that's something that would affect every single gamer out there and every single VR experience and all of this stuff. So, but it makes sense.
Okay. And then David, Look, I love the super chat, but we're not singing this shit. We're not doing it.
What is it? Let me read it first.
Unless Chris, you want to sing? I'm not singing, bro.
I don't know what song that is. Not to mention my
It's another Milli Vanilli song. I'm in love with you, girl. I don't know. I don't know. When you pack a smile.
I learned about Milli Vanilli 2 weeks ago when David mentioned it. I was like,
actually, is this Milli Vanilli? I'm not even sure. It could be.
All right, and then we got another super chat by Kelly, officially bullish on AMIT today.
Why is that?
Is it because he shaved? He shaved.
Oh, I shaved. Is that the reason? Because I shaved finally.
How about Odia? When are we gonna get some?
Agi, you got the Palantir go to market. It's like give it time.
What's going on with Odia? Actually, me and Chris. If everybody doesn't know, me and Chris did invest in Odia. So, but we haven't had an investor update in goddamn months.
No, there has been an investor update. The September one's coming out.
Yeah. I told him. I told Amit. I was like, bro, fuck this. Just take whatever money is left, buy some SLG with it. You'll get some great return, and you would have got really good return. You would have got 100% year over.
Bro, Chris was like,
that's dangerous, man.
No, of course it's dangerous. Chris was like, take all the hundreds of thousands of dollars and invest it in the stock. And even though, like, he was right. That's like,
no. The reason why I was like, look, you need operating.
That is bad advice, Chris. That is seriously bad advice. That's embezzling, by the way.
That's embezzling. That's why I was like, Chris, you're kind of telling me to do something illegal here.
No. It's not embezzling if you're doing it for a valid reason, right?
Oh my God.
The valid reason was that SLG was giving you
just like a Punjab
flow. It was giving you operating cash flow. The operating cash flow would have gone to support the business, right? So right now, SLG is paying a monthly dividend, and at the time, the monthly dividend was 15%. Right now, he's burning cash.
Yeah, but what if SLG went to shit? What if the company crashed? What if there's another pandemic and then like?
Well, the problem right now is that based on your runway, how many years do you really have left anyway?
We actually have 36 months. There's actually a decent amount of time. We're trying to reduce
36
the
months
runway.
of runway. Oh, that's good.
It's only him. I don't even think he has a staff anymore. It's just him.
Yeah. But tell you, do you get the updates? Because you're on the list.
I did not see I didn't see. Was it an email?
Because Kelly had an issue with that too, and I was like, bro, I've sent it out an update for the past 12 months, every single month. So
no, I did not get I only got like 1 or 2 in the beginning, and then never again.
Okay, so I'll check that out for you. Because Kelly had the same problem, but Chris gets it every month. So
right.
Yeah, the one thing I think that does make sense is taking the money and getting 5% on it. But the problem is I can't put it in Robinhood or SoFi because those are business accounts. I mean, they don't allow business accounts. So I don't know if you can take all that money and just drop it into a checkings account like that, given it's part of a corporation. Chris is dead right now. The Starlink is dead. But his face.
I like him this way.
Please don't do it to me. Yeah, bro, when Chris mentioned it, I was like, Chris, it makes sense, but I think it's illegal, so I'm not going to do it. But like, it would get a return.
No, illegal, that's super sketchy. And first of all, if it goes against you, then what?
Then you're fucked. Yeah.
Well, then the company's also fucked. All of that, all the investors and the company's done.
No, but an investor could literally sue over that. But like, if the company fails, the company fails. It's whatever. But if it failed because you ran out of runway because you invested it in a stock, like that's not.
I bought Bitcoin.
I mean, that's what happens, right? That's what happens with so many companies. You invest in them, and Palantir, what did they do? They bought Bitcoin. Remember, right?
No, that's what I'm saying. That's those companies did,
and it's not illegal for you to do that. By the way, that happens more often than you think, where companies will take the original thesis, which was this, that, and the other thing. They give it to you as a CEO to run your company how you need it to and be capital efficient. So right now, you're saying, look, right now the opportunity is, hey, I need to make sure that I have enough of a runway where the monthly expenses are being paid. Now, how am I going to do it? Am I going to take a side step and make sure I take some of that capital and put it to work so that it's generating operating cash flow that extends out the runway? If anything, you could have paid some of the money back in dividends to the shareholders as well.
Dividends,
right?
Yo, Chris is like, yo, I know I barely invest for the long term, but this
he's like, I want it back right now in dividends.
He's like, look, it's a startup, so I guess it's long term, but how can you give me some dividends quickly? How can you still figure this out?
Look, I'm just giving you
have 200 grand.
You keep your investors happy. Yeah.
No,
I think 200 grand. You put it into a 5%. You're getting 10 grand, right? So you're getting 10 grand that pays for some bills, which extends your runway. That's what's important in a startup.
But the question is, I can't buy either I buy treasuries with that, or I have it in a a business bank account that gives you that return, because you can't put it in SoFi like that. I can't just
Well,
deposit.
why do you got to go to SoFi only? Is that the only bank you're allowed to use?
Well, they're the ones giving 4.5. I mean, I guess I can go to like.
There's others. There's actually others giving around 5%, 4.55%.
Yeah,
Also CDs. If you can do like 6
I was
months
going to say
CDs.
CD. Yeah.
Yeah, you don't need to do just a checking account. You could do a CD.
A 1-year CD right now with a decent bank, because you're not going to need that full 200,000 right away.
No,
so if anything, if your projected yearly account balance that's going to be going out is, let's say, 25,000 or 50,000, you keep the 50,000 in your treasury account. You take the other 150,000, you put it into a CD that's generating you what, 5.5–6% for a 1-year CD. So what happens is, a year from now, that money becomes available to you. You can do whatever you want with it. You can take the return that you get from that CD, use it towards the business, right? And then at the same time, take the principal, do another CD if the rates are still good. That's the point. So I'm not saying go out and like go crazy with it and go.
Is there zero risk to corporate debt? Is it actually
not corporate debt? CDs are
no.
CDs are not
secured. It's a cash deposit, whatever, secure deposit or something. So you basically certificate of yes. You're guaranteeing basically a return, but you can't touch it for the year you put it in. So it's a guaranteed return by a bank.
Yeah, without paying a penalty. That's the thing. You can take it. There are ways that you can break a CD, but you'll be paying a shit ton in penalties, so it's not worth doing that. But a 1-year CD is nothing.
Yeah, 100 grand into that is fine.
Yeah,
gotcha.
You don't need all 200 grand for running your business.
Yeah, I would do that. What kind of return?
And I would go to a real bank, by the way.
SoFi is not a real bank to you?
I'm just saying, I'd go to a real bank.
All right, let's move on to this topic. Chris, your boy Disney keeps trying to sell off all their assets. ABC to Nexstar. You got Amazon with ESPN. Not really sell it off, you know what I mean? But any updates you're thinking about Disney in terms of their strategy and what they're really trying to do here with selling off some of their assets?
They're doing the right thing. They are trying to monetize the assets that they know are costing them money, but at the same time are not generating them enough revenue. So gone crazy. It's in the 80 billion plus range, but their margins have compressed significantly. And the reason why is because their legacy business is going down while their DTT business is rising rather quickly. So how do you fix for that? Well, you take the non-core assets, you spin them off, you sell them, use the cash that you have to reinvest it back in the business or pay down the debt, whatever you need to get the total cost out of your system. So right now, if you think about it, if Disney's only generating a 5% return on its ABC asset and that business is slowly dying and the cost is too much for Disney because they have pre-existing contracts and they have all these X, Y, and Z, by moving that off, they can actually grow their core business more. That's one of those things that you just have to, once you understand it, to see where things are going. Like right now, ABC's value in someone else's hands could actually be worth more than in your own hands because of all the stuff that's going on in your own company. So
didn't they just lower subscriber numbers again? Their estimates?
No. What they did was they raised prices on Hulu, on Disney Plus, and on ESPN Plus. They also made a deal with Spectrum or Charter to basically wholesale them memberships along with their cable packages. So basically right now, if you get a cable package, you get a discounted rate from Spectrum. And so Disney gets the benefit of getting a greater user base. Spectrum gets a deal point that they can use to sell the Disney bundle along with their cable subscription, right? And and at the same time, Spectrum, just the value of that Spectrum bundle becomes more. The whole thing with Disney right now is that they're in bundling mode. Like once you bundle services, you can actually upsell them significantly. And I think that's the target that they're going for. They're just trying to really raise up the margins. They're also, as they increase prices on their ad-free versions, they're keeping the ad versions actually the same price. And the reason why is because they want a lot more people to go onto the ad version. The ad version through targeted advertising actually generates a way higher ARPU than otherwise than they would have had in the past. So right now, what's happening is there's a lot of people transitioning to the ad version of Hulu, the ad version of ESPN Plus, and the ad version of Disney. And I think a lot of the advertising revenue is going to start showing up in the next couple of years, in which case people realize that the DTC business is not necessarily dead, that it's actually starting to come back. I mean, Netflix did the same thing, right? You remember Netflix about a year and a half, 2 years ago, everyone was like, oh my God, Netflix doesn't make money. What did Netflix do? They raised prices.
Netflix tripled. Do you think Disney can at least double in that same amount of time, or do you think
absolutely?
Really? You think it's an easy
Yeah.
double?
Yeah, absolutely.
In
Because
terms of subscribers or stock price, what are you asking here?
and stock price. There's two reasons why. Number one, their media assets right now are valued
160?
near zero
That's
right
asking
now.
a lot.
No, the thing is, their assets right now, outside of their parks and their other divisions, they're like their parks, their cruises, all those divisions are already making money. They're cash flow positive. They generate a good amount of cash flow. The DTC business and the linear business is what's slowly going down. Now, DTC is reaching, it's like trending towards profitability. Linear is now getting compressed because, as people cut cords, they're not buying these cable packages. And if you're not buying this cable package, that means that Disney, which used to get money from the cable subscribers, they're not necessarily getting that money. So their linear business is going down. So right now, Disney is trying to figure out how do we transition from linear to DTC? And it's not just them. Paramount's having the same problem. WB is having, like Warner Brothers having the same problem. Paramount having the same problem. So all these people are having the same problem. It's just right now there is a transition happening in how to do content and do it profitably in a streaming world. And I think each company is figuring that out slowly but surely. And I think at this point, give Disney about a year and you're going to start to see some profitability return to their streaming business, and couple that with whatever is left in their linear business will end up being a cash flow generator, I think, for Disney for years to come. So let's see what happens.
So I'm going to show you the chart and show you that you can be a little bit bullish on Disney besides it being a terrible investment. So here's the chart. If you look at any of these companies that are like these massive companies like Disney, Amazon, Google, whatever, they all sort of follow this trajectory of over the last 20, 30 years, whenever they started, that they're sort of in a channel of growth, right? And Disney is no exception. As you can see, it's actually approaching the 200 month. And this will be interesting if it stays there, because look, the RSI is kind of low. It's literally bouncing off the 200 month. It's kind of crazy how these things line up always. So this is an important level, but even if it crashes, I don't know. I don't see the downside for Disney. Let's say $60. The upside, if it stays in this channel, let's say, what year do you want to look at? 2025?
Yeah, 2025.
So 2025, somewhere at the end of, let's say 2026, make it easier. I think there's money to be made on Disney. Even if you're down lower, you're still, like you can be stuck in this range. Obviously, you can be stuck here for a while till 2027. But if you're not and you shoot up, there could be a double. Like you're saying, there's a 160 in the middle here. That is possible by 2026.
Yeah.
But this is no guarantee. Like you could see how long Disney has traded sideways since 2015. To now, it's basically trading sideways. So the thing is, it can continue on this 200-day and just slowly, accrete some value, stay at $100, and but that's going to take years and years to play out, because Disney might be in a position where it takes years and years to build their business again.
I mean, their business has not deteriorated nearly as much as people think. Like I said, it's more of a shift from linear to DTC that's really hampering a lot of streamers. And as everyone is figuring this out, the good thing about it is that everyone is having the same problem and the same solution is coming up. So it's not like Disney's the only one that's raising prices. Everyone is raising prices. So what's happening is you're starting to see a new normal come up, and this new normal will happen. And the one that has a lot of premium content that people just absolutely love is Disney. Like I can't see.
That's the part that I'm having. That's the part where I can't get on your thesis.
I'm having problem too.
I think that's what everyone on Twitter, they love you, they love your thesis, and then when you say the content, they're like, bro, I just
How much Star Wars do you watch a day?
And it's not even because of the woke shit. It's like I don't think they can make a Black
shit?
Mirror or anything. I don't think Disney has.
Dude, the woke shit is ridiculous. The only people who are listening to that is like 2% of the population. if Disney has bad content and bad movies, people aren't going to go to the theaters to watch those movies. That's it. As soon as they get some good hits going, people will come back. But they need that to happen. The thing I want to point out is that, or a question to you, Chris, because do you think we're heading into a recession or not? That's my first question. Just a yes or no.
Maybe a soft recession. Yeah, I think so.
Okay, so let's say we're heading into some soft recession, which will affect obviously Enphase, Tesla, will affect Disney because those parks are still expensive. So if your bull thesis is in the next year on Disney, it seems like that might not play out if you think even there's a recession possibly coming, because less people will fly to Florida or anywhere else around the world to go to a Disney park and spend thousands of dollars. It's just, even I'm not thinking about it. I would love to go on a vacation, but during a recession, I don't want to go to Disney World. So
yeah. I
think it might not be as fast as you're saying. That's all I'm saying. I see a position where they go up over time, but not as fast as you think.
The only part that I'll say is I want to see what the impacts of the price cuts are. I mean, the price raises are for Disney, what that does to their streaming business, and how do they manage that return to growth in that segment. The other thing is also from a parks perspective, they've got a lot of new stuff coming online as well. It's not like they have any shortage of like visitors at the park, and they have the flexibility to do cuts here and there. Like they've been doing like
but cuts don't help your bull thesis. If Disney announces more cuts and maybe the dividend gets postponed or goes less or it doesn't increase as much, these are all negatives.
They already cut the dividend. The biggest issue right now,
they killed the dividend and now they brought it back, but it's small.
Well, not yet. It's supposed to come back in December. It hasn't been 100% announced yet, but they are, like I said, in a position where their cash flow is doing well and their cash flow is growing. Their OpEx is down significantly, and this writer strike is helping because they're not producing as much content, which means that all the streaming money that's coming in, they're just using that to basically use that as cash flow. So like I said, this is something that we're going to have to see over the next year, how these price increases end up benefiting them. Like I said, a lot of people thought Netflix was dead as well a couple of years ago, and everyone was selling Netflix off. Like Netflix actually touched 100 something. Bill Ackman's 150. And Bill Ackman sold out his entire position. And what did Netflix do? They raised their prices. People did not give up their Netflix. They did an ad tier, which kept a lot of users on there. And so Disney is just following in the same playbook as Netflix. So they're applying the same logic. They're cutting OpEx where they
without
can.
the good
they're
content,
raising prices where they can. I think the good content part is very subjective to the people watching. I mean, if you don't enjoy it, that's one thing, and it's not. And just remember,
it's not that I don't enjoy it. Yeah. I'm tired of it. It's the same thing over and over. The reason Netflix is good is because you can get tired of something, and then they
got Wolf of Wall Street on Netflix now. They put it up there yesterday. They tweeted
it. Just remember, Disney is not only the Disney Channel. Okay, you also have the ESPN.
That's
part of it, and you also have the Hulu end of it. Because
why can't they put all that shit in one app, bro? Like if they did all
that. Thank you for saying that. They are doing that.
They do need to make that. Yes,
because then they would have so many recommendations you could surface to people. Like
the problem is, I don't want to pay. I don't know, what are they charging for all three again?
$20 a month.
That's okay. That's okay. $20 is all right.
There you go. So that's what I'm saying. They're bundling it so that they can do $20 a month, right? You get ESPN Plus, you get Hulu Live, and you get Disney Plus. So there you go. And
no, for $20 a month, I would pay if it was all easy. I think they have a thing right now that you can do it all, but it's going separate places. It's just annoying. If they just made it in one spot, that is better.
Yeah, they are fixing that, but like I said, that's something that's going to happen. The biggest challenge to Hulu Live was that they couldn't necessarily invest too much into Hulu because they had this contract with Universal Comcast where basically Comcast owned 33% of Hulu, but Disney could buy out that 33%, but it all depended on the valuation of Hulu at the time of purchase. So if the time of purchase, the valuation of Hulu was $100 billion, Disney would have to pay fucking $33 billion to Comcast just to get them out. So instead of expanding their Hulu services a lot, they ended up kind of just like letting it, just smoothing out. And now that date is coming up, by the way, we'll know by the end of this month, by the end of September, that deal is supposed to be done where Comcast is going to be paid whatever the agreed on the valuation is by an arbitrator, and then Disney will be 100% owner of Hulu. After that, they're going to move Hulu and Disney Plus into like one app and that one app experience, and then it'll go from there. Same thing with ESPN. ESPN right now, they're not trying to sell off ESPN, but the content production costs of ESPN have been going up significantly because the big guys like Amazon and Google have been buying up sports rights and media rights. So Disney has to pay more just to keep those rights. And so right now Disney is saying, look, what we want to do is get a partner like, let's say, Google, so that, they take a stake in ESPN. They provide their technological know-how, whether it's through their cloud services or whether it's their advertising model, and then build that on top of it so that this way both of them can grow together. They're also in preliminary talks with Amazon to do the same thing. I think Amazon is probably the more likely candidate to end up partnering with, because Amazon is actually going into sports a lot more now. Like if you look at, I think Thursday Night Football is all owned by Amazon, right? So Amazon is most likely partner to buy a stake in ESPN from Disney. And the money that they get from that stake sale, they'll probably use to pay off Comcast on this end. So it's all like money moving and ownership moving right and left right now. So
So speaking of streaming, there's a good question about real estate in the chat that I want to get to. That'll be the last question we end on.
And super chats. You have a couple of super chats.
Okay, I'll get to those in a second. So my uncle came over for the weekend and he wanted to watch the U.S. Open. He was like, turn it on. I was like, I don't have cable. How do I get the U.S. Open? And he was like, what do you mean you don't like get the U.S. Open? So I got a free trial for YouTube TV, right? Just to get the U.S. Open. I've been going through YouTube TV over the past couple of days. First of all, I can finally listen to CNBC in the morning when I'm at the gym. I don't have to wait for the stupid YouTube clips. I can actually like click CNBC on YouTube TV and like listen to Squawk in the Box in the morning. And then last night before I went to sleep, I was just browsing through the channels. It was like I was in 6th grade. I saw Nickelodeon, I saw MTV, I saw CNN, I saw Fox. I went from Sean Hannity to Anderson Cooper, and I was like, channel surfing is kind of fun. I was watching the fucking ads. I was like, maybe I do need that medicine from this Pfizer.
Hims?
I was just like going because pharmaceutical ads are like ridiculous on these. So I was just like, I wanted to bring up, do you guys ever miss channel surfing? And when's the last time you actually went through real channels on some type of TV product?
No, don't miss it. And I don't have cable.
I would say I don't necessarily miss it, but I do see it all the time. Whenever I go to a hotel room, they don't have streaming services in most of these hotels. It's still cable. Like you're just flipping through the channels and stuff, right? I mean, to be honest, sometimes
they want to sell you that pay-per-view.
Yeah, I mean, I would say
literally.
sometimes it makes sense to just like go to like the 5 HBOs that are out there and see whatever's playing and just not have to choose like which one I'm gonna watch. But then again, it's like,
bro, it was such a different experience from clicking on YouTube recommendations. Because like on YouTube, like I'm getting all these videos, thumbnails, title, I'm trying to make sense. Here I'm like going from CNN to Fox to like, I watched 2.5 Men. I haven't seen this shit in 10 years. 2.5 Men, a rerun from like 2004 popped up. I was like, 2.5 Men, and YouTube would have never shown me. Like and so I asked myself, wait, so there's still like,
how much do they charge, by the way, for that?
$72 a month.
$72 a month for just television.
Yeah, and I have like 17 Google accounts, so I'm not paying for that shit for a long time. I'm gonna get a lot of free
Wow.
trials. But I realized there's still 50 million people in America that literally they do what I did last night. They channel surf, and those 50 million people are like the older generation. That did you guys know Sean Hannity on Fox gets 2.4 million people that watch him every night? Like,
yeah,
that's a big deal, bro. For cable, well, it's not dead yet fully.
Well, the thing is, for two things you need live TV. For one is for the news, because people need to watch the news, what's happening, all this other stuff. And number two, you need it for like live sports. Like there's a difference between enjoying live sports when you're actually watching and you're you're doing everything along with it. Even if you're like at a bar or whatever, you're going to be watching live sports. You're not going to be watching a pre-recorded like sporting event. And if you're not a sports fan, whatever, it doesn't really matter to you. But at the same time, I think when it comes to sports, you need some form of streaming that has live component to it.
Okay, let's do this question, then we'll do the last super chat. This is from Chad, and it's for VITALY, but I'm sure, Chris, you could chime in. I got a question for VITALY. VITALY's always bullish on real estate. What happens in 5 to 10 years when all the boomers start to pass away? There will be lots of real estate put on the market at once. Kids will most likely try to sell.
Kids.
Boomers who
Wow.
had multiple. So is he talking about houses that were inherited?
I guess he's talking about inheritance. I mean, look, boomers have been dying off right now. So why aren't they all selling? It's not like this is happening in 10 years. Right now, this is the generation that's inheriting all this stuff, like currently. And me as a real estate owner, I'm giving most of my properties to the kids, unless there's some reason that I need some money for some important thing. Obviously, that happens in 10, 20 years that I don't know.
Wait,
about.
don't you have 2 kids? You just said the kid. Which
Two
one?
kids. Only one. Only my favorite.
That was a Freudian slip. He likes one over the other. He knows.
Only one is getting it.
Like, which one's getting the money and which one's getting the bills? That's the question. It's usually the younger one. The younger one gets all the shit.
He gets everything.
The older one gets fucked over, man.
No, but I don't believe in that thesis, what you're saying. I actually believe in the Tom Lee thesis, where the money is being transferred over to the next generation. In most cases, obviously, boomers are going to live their lives and spend a lot of money too to go on experiences, go on cruises. My parents have sold a house to go on a cruise and live their life and not worry about money. So that does happen, but still their wealth is really tied up in real estate that they're going to pass on, most of it. And I'm going to do the same thing. So I don't know this bear thesis that everyone's going to flood the market with real estate. I think we have a boom cycle for real estate for 10, 15 years easily. So I'm not going to really worry about that.
So I would say these cruise lines are
See, she sold her parents' house, but that's different. Your boomer parents did not sell it. They gave it to you and you sold it.
The best thing, right? I mean, this entire cruise trip, I can tell you, boomers are enjoying their lives, bro. Yeah. There's 3 places I see them. I see them on the cruise ships, on the elevators, you know, going to like different shows and events, but then they're all at the casino just giving that money back, man.
That's right.
Like, I mean, we gave the money back too. We had a good
no, but they're spending it. That's the thing.
Yeah.
It's going out into the economy if they're selling a property or whatever, or their stock. By the way, stock too. They're taking out money from investments. So we should be bearish on equities. Like, this is ridiculous.
I don't know about that. I don't know. I don't know a lot of people that are saying, like, I know quite a
few. The 4% rule. What do you mean?
No, I'm just saying I've seen quite a few people as they pass away. They've only just they've took their inheritance and their stock and portfolio and just gave it to their kids, you know?
Yeah, that's what I'm saying.
Their kids.
Right.
Yeah. Right. So are you saying that they're all selling it off? The kids are going to sell off the stocks too?
No, I'm not saying that. They were saying that in the comments that either the boomers are selling it or the kids are all going to sell it. And I don't know. Like, if the kids sell off all of their investments, then they're going to be poor. Okay, so that would be a poor decision, and maybe that happens with some families. I'm sure of it, but I'm not teaching my kids to do that. I'm teaching them to respect and learn about assets and what they do for their livelihood. So I guess it depends what you teach them.
Yeah, people need to like one of the research things that people have to do, and maybe we should do it too, is how to set up a trust so that this way you don't have to pay any estate taxes when you pass away. You know.
Yo, Chris, people don't know. Chris is like a tax expert because we were talking to the WhatsApp. He was coming up with all these rules.
He's giving us tax advice. Everybody start writing.
Like, what?
By the way, did you ask your accountant if
I did.
I was right?
I think you were actually more wrong than right, by the way. More wrong than right. So, but
got some tax fraud over the past couple of years now.
Let's not talk about it now. I want to read you what he wrote, and I didn't read his whole thing, but he explained it, and I can't do what you're saying. But we talked about it. We talked about 17,000 gift taxes or whatever.
Yeah,
it does not apply to the way you're putting it. So we'll talk about that later. I don't have all the information right now.
The context, real quick for everyone, is instead of me giving these guys a 1099 for the YouTube money, they wanted to just take it as a gift, which theoretically is legal, but there's some loopholes in there we got to figure out. So
thanks a lot. Now you put it out there, asshole. Now we have to get a 1099.
No, you don't. But if it's a real gift, if I'm giving,
no, it does. You don't need a real 1099. If this guy basically pays the taxes on it, he pays the taxes. We don't have to pay twice. He's giving us post-tax money, so it doesn't matter.
So it's a gift. It's a fucking gift at that point.
Well, you can call it a gift, but you pay taxes on it. So call it what you want. It's your cash.
The difference is Amit's at a much lower tax bracket than me and Vitaly are. So it ends up.
How do you know that? How do you know I'm not paying 50% taxes?
Because you're doing this.
You're like a college kid.
How do you know how much money I really have, bro? Where's my wallet?
This from your parents.
I don't even have a wallet. I forgot. I don't have a wallet, but.
You don't even have real bricks. Parents
These are real bricks. What are you talking about? They're fucking real. Real quick update on Vegas. Heinze Ketchup. How many going to Vegas? I don't know. I think 10 people. There's definitely a core 7 that are going. Me, Chris, Vitaly, Carlos, Kelly, Matt Money, and Tevis. 28th and the 29th is when we're doing fan stuff. viewer stuff where we hang out and all that stuff. So I think there's 10 people confirmed. It might be 15. It might be 5 last minute. One person, Ani, last night, he said he can't go. So I really don't know who's going to end up coming, but the schedule.
So is it like 17 total?
So, if everyone, well, if the 10 people actually come up, well, Carlos is not going to be there for 2 days, and then TJ is bringing his wife. So around that, if everyone actually shows up.
Yeah. That's still pretty good. It's like a mini all-in.
Not Arnie, no, Ani. Ani's he's a Palantir guy that I know. He last minute he can't make it, so he emailed me last night. What was I about to say? Super chats.
How to cover tax fraud.
Super chats. Oh, the tax stuff. Yeah. But let's.
Well, I'll send you the email, Chris, and then we can talk about what he wrote.
Okay.
Okay. P Chef says $4.99. Love the show, guys. Thank you for being here, P Chefs. Okay. David says, I realize you guys have been asked this like a million times, but can you finally set the record right? I think you meant to say straight, David. You were wrong. It's spelled straight. The legend is how you guys first meet each other. Was it at a Dungeons and Dragons convention?
Dungeons.
I just don't know anything about culture. I'm just so bad about this. Chris, why don't you explain how did we all meet? What's your version of events?
I mean, for me, it was damn Palantir. You reached out to me and said, "Hey, I know you talk a lot about Palantir. Why don't we talk about it on pod?" And so I said, "Okay, why not?"
No, that's not how you're the one who came up with the Palantir Weekly idea.
No, the Palantir Weekly. You reached out to me to do an interview.
Oh, that's right, to do an interview.
That's right.
Correct.
So you reached out to me, so I started talking to you about it, and then we ended up saying, "Hey, listen, why not just talk about Palantir on a weekly basis? There seems to be a lot of information coming out. It just went public." And as I was doing more research, we ended up building the Palantir Weekly Pod, and it ended up being something that worked, and we had good chemistry on the camera and on the stream. And so, eventually you ended up having a conversation with VITALY and Carlos. And that ended up translating.
Well, so I wrote AMIT because I saw he was discussing Palantir and he was blowing up. Well, you're getting a lot of subs from Palantir, and I was like, all right. I started doing homework on Palantir. This is what is this? A year and a half ago now? Something like that, right?
Yeah.
I started doing homework on Palantir, Carlos too. And when I contacted you, I'm like, all right, let's talk about Palantir. We had a video you watched. And,
it was a great video. It was such a good video too.
Look at this, man. I think you lost some weight, Chris.
There's no background. I'm wearing a fucking weird hat. Like there's no bricks. It's just I'm wearing the same shirt. You see that I'm wearing the same shirt.
Remember that beard? Remember that beard?
Remember that beard? Yeah, cutting that beard was the greatest decision ever, bro. I went 6 years with that beard. No one in college told me to cut it. I still got girls in college with the beard.
I don't know.
But I would have got 10x the amount of girls if I didn't have the beard.
Yeah, totally. Yeah, you cost yourself a lot of poontang.
I lost it a lot. So I did the podcast with you, and our chemistry is good. And then one day, because we're all in the same circle, Chris messages all three of us. He's like, "Yo, you guys just want to?" No, what happened is I stopped doing the Daily Cowbell with another YouTuber. I started doing it with VITALY. And then and Chris was like, "Yo, I work late at night. Can we do a podcast every night?" So I was doing you and then Chris, and then it was burning us all out, and we were like, "This is stupid. Why don't we just all do it together?"
Well, we were doing the Daily Cowbell, and then you were doing the thing right after the Daily Cowbell. I'm like, this is ridiculous.
It made no sense. It was like ridiculous. And so I was like, "Yo, Chris, what if we just merge it?" He was like, "Sure, that's fine." And VITALY was like, "Sure, I don't think
you said that. I think Chris was the one that said we should all do something together. So I'm going to give credit where credit is due, not to you. So make sure everybody knows that.
Well, no, I remember sending a group text saying, "Hey, what if we merge?" But I think it was mutual. All of us wanted to.
I bet you in 2 years, Amit's going to be like, "You know what? Those TFC spreads were my idea."
No, bro. Hey, yo, okay. So hold on. So I have had dreams of TFC going to like $45 and me making a decent amount of money, and I have dreamed of
you were so close. You could have sold those dreams. I bought those dreams.
I could have if I fucking listened to Chris. I have dreams of me doing the tweet because that would be my first big win in the stock market. And in the tweet, there's variations of the captions of how I thank Chris at the end. Some of them are like, "Chris, I'm going to suck your butt." Some of the Chris is just like, and I come up with all these different variations. So now I need to see it happen in real life.
Right.
And it's going to be the most epic tweet ever.
You can slave the BJ, man. I don't need that.
No, we got to film it.
We got to film it. Yeah.
That's the 10-year anniversary when his spreads come true.
Wait until Amit gets crypto. No, but Chris, Chris, I've texted him screenshots when the spreads were up, and I literally told Chris, I'm like, "Yo, this is all you." And he's like, no, bro, you made it. I was like, "No, but you taught me kind of how to understand this stuff." So I'm very grateful for that.
Oh, and the thing is, the way that I presented it to him, initially was, hey, look, this is a risky play, but right now there is an opportunity in the market. Let's take a look together. And the ultimate decision to buy was your decision, and how much you did it was all up to you. So I can't take any credit for that. The part that I can take credit for is selling you to sell and you not doing it. That's the part that, because I was telling you, you followed me in the door, but you're not following me when I'm leaving. Like,
Correct,
what I mean?
but Chris, you weren't adamant
listen,
about it. You
he
weren't
pulled a
adamant. You said,
Chamath,
I'm
he did the
selling,
same
and you're like,
thing.
you can do whatever. If you had called me, you're like, Amit, sell the fucking spreads. I would have been like, all right, fine. But you didn't call me.
Listen, he did a Chamath. He sent a tweet out, and you didn't listen to it. Okay, that's all I'm saying.
I called him. I actually called him.
No, you did.
Said,
You
hey,
texted the group chat. You're like, I sold 75% of everything.
No. I have the receipts. I actually sent you like, hey man, it might be some time. It might be the time to sell. I'm selling. Remember, I said that too. I was like, I'm selling.
Look, Chris absolutely said to sell. So there's nothing against it. It was my decision. I was like, well, I want to hold it till 2025. We'll see. So.
And you're gonna hold it. Enjoy it. So P Sesh says VITALY and KRIS look relaxed. Must be Meta and Google, which are doing really well, and Amazon too, by the way. Just want to point that out. And Tesla's doing really well too. So there you go.
Oh damn, we have two. I wanted to really quickly show this thing about Chamath. Did you guys see him get bodied yesterday on Twitter? Like destroyed? Let me read this real quick. So Chamath says, you can't make this up. Biju raises billions, blah, 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 blah. He goes on some thread about this company that raised billions and left retail holding the bag. This guy responds, you can't make this up. Virgin Galactic raises hundreds of millions of dollars from brand name investors, becomes valued at more than 20 billion to disrupt space tourism. They use the money to do flashy partnerships and partner with Under Armour. 2022, their chairman, Chamath, quit. Late 2022, the company hit with fraud. And it turns out Polyhapatia profited 315 million. Richard Branson made 1.4 billion. Stock declined by 96%. And then there's a screenshot of KRIS saying, I got blocked by the man in the arena because Chamath blocked him. I mean, like, this shit must eat him up at night, bro. He has a really good tweet about startups, whatever. And this guy's like, fuck you. You left retail holding the bag. You have no authority to talk about other investors holding the bag. You are the king of making bag holders. And I think it has to eat at Chamath, even though he'll have this personality that, I'm rich, I'm in the arena. At night, it has to kill him that he ended up, because he was comparing himself to Warren Buffett in terms of returns. No one will ever compare him to Buffett now, given Buffett would never do what he did to retail investors.
Did you see when Chamath responded to me? I was in the arena for 1 minute. Oh, you didn't see that?
I didn't see that. He responded to you?
Yeah. So some guy, basically, I was talking regarding Chamath. I forgot what the tweet was, but some guy says, you should do this A, B, C, and D. And I said, I'll do what I want with my tweets, and you do what you want with your tweets. And Chamath was like, I laughed out loud. I spit water out of my cup.
Really? I've never seen that before. That's a great tweet. That's awesome. That's awesome.
And me and him are hanging this weekend.
All right. Last tweet. Last thing then, Chris, I know you got to go. You guys seem confused how you first met. I think there should be a 22 episode Netflix documentary about the beginnings of Finance Junkies, and it will feature a meeting at a Dungeons and Dragons. David, I love you. I love your comments. I just don't get how you can drop $100 every episode. But I really appreciate it. All of us do. But I feel bad because it's a lot of money.
And does David want to come on the podcast and reveal who he is? He's Chamath.
No, can you imagine? And he hasn't told us where he got the money from. Maybe he got the SpaceX stock or whatever. Galaxy, whatever.
He sold the SPACs early.
Yeah.
All right.
That's it. Thank you, everybody. We're done for the work week. We'll be back Sunday. Hope you guys had a great week. And we'll see you then.
Later.
Bye, everyone.
Have a good one.
See ya.
Good night.
Later.